We welcome you to our classes. Today's topic is depreciation. Depreciation is an accounting method of allocating the cost of non-current assets over its useful life and used to account for declines or decrease in value over a period of time. The monetary value of an asset may decrease due to passage of time, usage, wear and tear, obsolescence, etc. Instead of writing off the cost of assets into one accounting period, which will be a burden on the profitability of the business, it is spread over a period of time, also with the intention of retaining funds necessary for replacement. If no depreciation is provided, profit will get overstated, therefore it may get distributed, depleting the cost of asset as distribution. Contrarily, depreciation will restrict distributability, thereby retaining the cost of assets within the business in some form. Next, if the asset is not purchased, it may have to be leased out. The lease rental will be a charge on the account, so depreciation will replace the charge. Depreciation prevents overstatement of profit, thereby reflecting the fair position of financial results. There are several methods of depreciation a business may choose suits them best. The popular among them is straight line method or fixed installment method. Depreciation is calculated on the original cost, or the depreciation amount will be the same each year. The other popular method is reducing balance method or written down value method. In this method, percentage of depreciation is fixed and it will be calculated on the written down value except on the first year. Dear student, formula for straight line method is cost of an asset minus residual value or scrap value divided by useful life of an asset. Reducing balance method is book value multiplied by percentage of depreciation. The unit of product method is cost of an asset minus salvage value or residual value divided by useful life in the form of units produced. Students may note the reducing balance depreciation formula in mathematical forms. In the following illustrations, comparison between straight line method and reducing installment balance is given here. Number 1, depreciation is calculated on the original cost as against on the net book value. Number 2, depreciation amount will be same every year. The other depreciation amount will fall year after year. In straight line method, balance will become zero subject to residual value. Diminishing balance method, balance will never become zero. In number 4, while depreciation amount remains the same, repair charges will gradually increase in the later years, thereby total charge to the asset in P&L will keep rising. Diminishing balance method, since the depreciation will come down, whereas the repair charges may go high, it may not make a big fluctuation in the profit and loss account. Number 5, this method is best suited for assets like patents, land properties, as they have lesser or zero repair charges. Diminishing balance method is suited for fixed assets like plant and machinery, motor vehicle, etc., where require regular repairs and maintenance. In addition to the above, There are other methods of depreciation which we will have a glance at. Revaluation method, where the asset is valued at the beginning and end of the period. Difference is taken as fall in value or depreciation. In unit of production method, instead of lifetime of the assets, the units expected to produce by that equipment is taken as the base and per unit is calculated. And depending on the number of units produced, depreciation will be calculated. Another method is double declining method. It is made in order to accelerate the charge and write off the assets quickly or on a shorter period. Real lifetime is 10 years. It will be assumed as 5 years and written off with a higher depreciation per year. Next, SYD or sum of years depreciation method is also another method of accelerating depreciation. If the lifetime of the asset is 5 years, it is the digit of 5, 4, 3, 2, 1 is added. Say the total digit is 15, 5 over 15 in the first year, 4 over 15 in the second year, and so on. Be calculated as depreciation. Earlier years the charges are higher. In the later years it will become less or lower. The next one, the annuity method of depreciation. In this, the amount spent for the purchase of the asset will be presumed to have been invested in an investment. Anticipated income from that investment will be considered as depreciation amount. If the rate of return expected doesn't fluctuate much, then the depreciation charge will come down from year to year. This method is commonly used where the value of the asset is very large and has a long period of life and fixed rate of return. Amortization method. In this, the asset said to have been purchased on lease. Therefore, the presumed lease amount is charged as a depreciation. This is usually used for copyrights, royalty, etc. Another method is depletion method. These are used for mines, quarries. To excavate, the volume will come down because this cannot be replaced. The students have got some insight to various methods of depreciation. Now let us look at some questions. A firm purchased a machinery for 5,000 on January 91, which had an expected useful life of 4 years and an expected residual value of 1,000. And the asset was to be depreciated on straight line method. On 31st December 93, the machine was sold for 1,600. The amount to be entered in 1993 profit and loss account for the profit or loss on disposal is 4 options are given. The cost of the asset is 5,000. After minusing residual value, it will be 4,000. Now the students will have to resolve to say whether the depreciation is provided for 5,000 or 4,000. Since it is straight line method, it will be 4,000 after the residual value. If you look at the disposal account, machinery cost 5,000, accumulated depreciation since it remained in use for 3 years, 3,000. Disposal price 1,600. Therefore, the loss is 400. The answer is D. The next MCQ. A vehicle was purchased in 2017 for 24,000. Expected useful life is 4 years. Residual value of that is 8,000. The business depreciated the motor vehicle at 25% per annum using the reducing balance method. No depreciation is charged in the year of disposal. The motor vehicle was sold on 31st December 2020 for 12,000. What was the profit on the sale of motor vehicle? 4 options are given. A disposal account is prepared where the cost is known, sale proceed is known, so we will have to calculate the accumulated depreciation. Since the method of depreciation is reducing installment, in the year 1, depreciation is 6,000. Therefore, in year 2, written down value is 18,000. Depreciation is 4,500, and therefore written down value is 13,500. For the year 3, depreciation calculated is 3,375. They say in the year of disposal no depreciation, therefore year 4 no depreciation is provided. Total amount is 13,875. Therefore profit is 1875. Answer is A. Now let us look at the next question. Wilcox Company purchased a mini computer in year 1, day 1 for cost of 50,000. The computer was depreciated using the straight line method over an estimated of 5-year life with an estimated residual value of 5,000. On January 1, year 3, we are changing the assumption as lifetime is 10 years, residual value is 800. Question A. Prepare the appropriate adjusting entry for depreciation year 3 to reflect the revised estimate. Cost is 50,000. Residual value of 5,000 is recognized since it is straight line method. Therefore, depreciable value is 45,000. For 5 years lifetime, 20% per annum, that is 9,000. So year 1 and 2, 18,000. When you deduct it from 50,000, the written down value is 32,000. Revised residual value is 800. Therefore, depreciable value is 31,200. Since the lifetime is assumed to be 10 years, it will be 10% per year. So the answer is 3,120. Now the question B says the same thing have to be done. That is to calculate the year 3 depreciation on sum of years digital method, SYD method instead of straight line method. Here again, the depreciable value is 45,000. Since lifetime is 5 years, the 5 years are digitized. 1 plus 2 plus 3 plus 4 plus 5, which is 15. Therefore, in the year 1, 5 over 15, year 2, 4 over 15, calculated on the depreciable value, which is 15,000 and 12,000 respectively. Therefore, the written down value at the end of year 2 is 23,000. Since the assumptions are revised in year 3, the residual value is 800. Therefore, depreciable value in this method is 22,200. The sum total of digits for 10 years is 55. Therefore, in year 3, it will be 10 over 55. Answer is 4,036. Dear students, we recommend more and more exercise in order to get a better understanding of the subject. Before we conclude, we have attached a flashcard where some points are given for you to remind yourself of the subject we studied today. Dear students, as you all know, these lessons are provided to you by our YouTube channel, SL Account School. So we kindly request you to subscribe, share, like and recommend to other people who are interested. Thank you very much.